Akaisha and Billy are one of the pioneer fire couples who retired at the ages of 38 in the 90s, nearly 30 years ago when early retirement frenzy did not make any waves. They have been through every known fire struggle you can think of, and they poured out every details of their lives after quitting their jobs in this interview. So I think you can agree with me that these two are more than qualified to speak on the fire movement. Welcome to the show, Akaisha and Billy. It's so good to have you both with me today.
Well, thank you.
Sure, thank you for the invitation.
Yes, thank you very much.
So I want to start with your blog and the things you write on there, especially when you mentioned that realizing that you were going in the wrong direction sort of accelerated your decision to fire. Now, can you explain more about what going in the wrong direction meant for you?
Let me turn the question around for you, and that is, you're working. You know, we were working 80 hours a week, busting our ass, just like I'm sure you are and other people are, and it got to a point where how much is enough? Do you have that number in your head?
Yeah, every day.
Okay,
that's great.
There you go. Well, we were there. So we realized, I did the numbers, and I did them once, I did them twice, I did them 100 times on the back of envelopes back then. And we had enough that we could financially sustain ourselves for many, many, many years. And so then it was just a matter of, do we want to do it? You know, what are we going to do? We were 38 years old at the time.
Yeah, in answer directly about like thinking that we were going in the wrong direction, we got caught up in like the financial competitiveness of California. Nice home, nice cars, really good wine, really nice vacations. And it's a lifestyle of fun and zippity-doo-dah, you know what I'm saying? Because everybody's doing it and you're sharing everything that you just learned and so on. But it comes at a cost. And when Billy said how much is enough, it changed our lives. It virtually changed our lives. And at that particular point, even though we were both ambitious, Billy had moved from the restaurant that we owned to being a stockbroker manager at a financial brokerage firm, Dean Witter Reynolds, at that time. And he was working days, and meanwhile I was still keeping the restaurant going, working nights, weekends, and holidays. So we weren't really seeing each other. And so our relationship suffered. And so between how much is enough and our relationship suffering, we knew we had to make a change.
We were on a treadmill where there was never enough. You know, we're entertaining with people and our relationships with other friends of ours, and where there was never enough. You were always trying to buy the newer car, buy the bigger house. You know, we were just chasing a rat chasing on a treadmill or something. It just got to be ridiculous.
Now, because in my mind, 1991 was not exactly the time where people are talking about quitting their jobs or retiring at an age other than 65. But you two decided to do it at a very unconventional age at 38. So now I'm trying to find out what scared you the most before that decision.
Living in Santa Cruz, California, it's a major surfing hub for the West Coast of the United States. And there's a creed on most surfboards, and it said no fear. So we took a look at each other and said, look, there's no path. We've got to create our own path in this thing. And so we just went at it and jumped in with both feet, and we didn't look back. We always looked forward.
Well, and we didn't allow room for failure, Idy. We just did not consider that. We bought a restaurant with no money down when we were 26, and we worked our patooties off day and night for years, you know what I'm saying? And if we would have allowed room for failure, we would have failed at that job, at that career of the restaurant. Billy was trained as a French chef initially. And so we took the early retirement with the same attitude. We are not going to fail. There's no room for it. We're not even going to entertain that thought. And so we figured that we'd figure it out.
We like to have a saying that we work without a net. I don't know if you know what that means, but that's, you know, like a high wire act. You know, they have a safety net down below in case they fall. Well, we don't go that way.
Right.
We don't want a net.
Yeah, we didn't walk on the wire going, there's no net, there's no net, there's no net. Oh
No.
my gosh, I'm going to fall, there's no net. No, we just walked on the wire. We're getting onto the other side.
You had absolutely no fears?
Well, I have to say that the only fear that I had, Idy, was that I would be on the other side of the planet and my parents would die and I would miss being with them at their last hours. That was my fear. Because when you're on the other side of the world, they could call, it could happen at 3 in the morning my time.
Right.
And then what am I going to do? I got to arrange a flight for 30 hours to get back to the States. That was my biggest fear. But as it turned out, the fact that we were retired allowed us both to do end-of-life care for our parents, something we could never have done.
You can't live your life in fear. You cannot. That's no way to live. And you're gonna constrict yourself if you continue to live your life in fear. So you just got to go for it. I mean, at some point you got to say, okay, I'm prepared and I'm confident in myself.
Wow. Another amazing thing you do on your blog is publicly tracking your spendings, and you have managed to live under $30,000 annually. That is not just for one person, but for the both of you. How much exactly did you save up before deciding to retire?
We had about $500,000 back then, which would probably be about $1 million today. What we did is we created a money machine. So that this money has been invested all along. In fact, it was invested before we retired. And so that as it grows, we pull out a small amount of that every year, and that's what we live on. So in a nutshell, in rough numbers, our portfolio's averaged about 10% a year. We spend less than 4% a year. That leaves 6% a year for growth and inflation. So that's what I say. We created a money machine, barring any catastrophe or things where things blow up. We're good. It just keeps growing and growing, and it's called compounding. And the compounding aspect of the financial markets is amazing.
That's why we always tell the young people to begin when you can, because you have something we don't have. You have time. And if there was one thing we would have changed, we would have invested younger had we known. I mean, our parents didn't know about investing, and you're living in a world now where people are talking about it. No one ever spoke of that when I was growing up, you know what I mean? And so now you have life ahead of you. You've got years and decades. Start saving now, and
investing
time,
now.
Yeah, time will take care
Yes.
of it, compounding.
That's why, on our website, we try to put things in simple terms that everybody can understand. I learned this when I was a stockbroker, that I could speak to you in using words that you have no idea what it means, and that's not going to do you any good. You're not going to invest with me if you don't understand what the investment is. But if I can break it down to a simpler way for you to understand it, then there's a greater chance of success for both of us. And that we try to really emphasize that simplistic approach on our website.
A lot of folks are concerned about taxes, and they're worried about what the future might hold. So I'm wondering now, how do you manage your taxes?
Basically, capital gains are taxed at a lower rate than income, and so all throughout our life, and we started structuring this again before we retired, is to use growth investments as compared to income investments. Income is taxed at ordinary income for the U.S. tax codes, and it's taxed at a higher rate. So if you can use capital gains, then you are in control of how much money you want to pay the government by deciding how much you're going to sell and how much you're going to live on. And so the capital gains tax rates in some cases can be zero right now in the United States. And so that's the way we structured our portfolio going way back. I think too many people place an emphasis on income, and I think especially for millennials, they need to look at growth, and that is my advice to y'all, because the income will come. If you turn $100,000 into $1 million, what do you care about receiving a check every month? And in that period, you've not paid any taxes, or very very minimal taxes on any dividends that you received. So that's the way we approach it.
Please share your top 3 savings and top 3 investment strategies.
Okay, on the investment side, my primary advice is to start as early as you can. Like Akaisha said earlier, time is on your side. You have time. I don't know how old you are, but you said you weren't born in '91, so I can rough it out mentally. But we've got about 3 times of your age on you, and so we know there's an end game to us. We know we're going to be here another 20 years maybe, and that's it. Whereas you've got 40, 50, 60 years of investing. You got to let that work for you. Start as early as you can, invest as much as you can, and as often as you can. And today with the brokerage houses, some of them like Fidelity in the United States, Fidelity.com, you can start with nothing. They've got zero balance accounts now. And then you can just add so much every month to it and to like an index fund. And there's no expenses or no fees at all on that, which I think is a fantastic opportunity for young people. And then let the market work for you. Just sit back, invest as much as you can, as early as you can, and you're going to start seeing growth at some point, 10, 15 years out. All of a sudden, it's going to start, the scale is just going to start rising, and it's going to be impressive, to say the least.
I would say, too, to learn the language of finance. I mean, just even a few terms will start, and they'll take hold, and then you can learn from there, and that way you won't be vulnerable to someone who's unscrupulous. You'll be able to say, wait a second, I know X, Y, Z. So learn the language of finance and learn from your mistakes. And
live below your means.
Yes, in terms of savings, live below your means.
It's really not that difficult if you're got some sort of a structured life. And
well, we track our spending, so like we know exactly what we spend every day and every month, every year, what our daily cost average is, and so on. And so we know exactly how much a percentage of our net worth that is as well.
And so we know what we're spending right here in Mexico. We know what we do is when we're in a different country than the United States, we base our spending on the local currency, because that's what we want to understand. And so we know that we're spending X amount of dollars right now in Mexico, and when we go to Guatemala, it'll be probably about the same amount of dollars, but it'll be in a different currency, and on and on.
If you live like a foreigner, then you're going to be spending more money. If you live like a local, you're living on the local economy, and so you'll be spending less money. So that's what Billy's trying to say, is that we know what we're spending in pesos or quetzales or dong or whatever, baht. And so you live like a local instead of saying, well, it's just a couple bucks. It's just a couple bucks. No, you can get full for $1 in Thailand.
And this goes back to our restaurant experience. If you have a small business, you have to track your spending. It's one half of the ledger, one half of the balance sheet. You got spending and you got income, and you better hope that you got more income at the end of the month, or you're going to be going in the hole. So it's just prudent to track your spending every day so you know where you're at. And so we just transferred that skill into our personal lives, and it's worked well for us. And then, like Akaisha said, we also have a way of knowing what percentage of our net worth we're spending on a daily basis. And so that if we start to see it get out of hand, we make an adjustment.
Right away. And I have one last thing, Idy, that I think is really important, and that's to keep peer pressure in perspective. Because it's really easy. There's always going to be that culture of wanting more, spending more, keeping up. It's just kind of a human thing, and there's nothing wrong with it because we all like new things and fun stuff. But if you keep the peer pressure in perspective, you don't need that new car. You can keep a car around for 10 years, and so what? You know what I'm saying? Or you don't need that new digital toy. Keep that peer pressure in perspective, and don't let it knock you off your goal.
If you're going to retire early like we did at 38 in those early years, I think you want to keep your spending as low as possible in those early years, regardless of percentage of your net worth. In the event that something happens and you get a 50% pullback in the market or whatever, you're not going to freak out and make a bad move. Another thing you might want to do is have a couple of years of cash. Whatever you're spending, multiply that per year, multiply that times 2, and have a couple of years in a money market fund in the event that the market falls apart. And so that you don't have to extract funds out of the market. You can just let that work for you continuously.
That is great advice. Now, in your opinion, from years of experiences, what are some of the biggest misconceptions about the FIRE community?
And one of the things that Akaisha and I did is we didn't tell anybody. We didn't tell anybody, not even our parents, our brothers and sisters, no one, of what we were doing, because we did not want them to try to challenge us constantly and pull us down. We said, no, we're on our own path. And then when we retired, they looked at us like, well, how'd you do that? I'm still working.
And they also said,
I'm paying for a car.
Can't do that.
Yeah, they also said you can't do that. Right. So that's a big misconception. The other thing is that a misconception in the quote FIRE community is that if you earn any kind of money from a side gig, that you're no longer retired. You can't be retired if you go pick up some job someplace that you've been dreaming to do. Then all of a sudden now you're disqualified. You're off the team. And that's right. You're still working. Right. What a joke. I mean,
that's where financial independence comes in. When you are financially independent, you can do anything you want with your time. You're not dependent on a paycheck for your life.
Right, and that means that all those old guys at Walmart, all the greeters are they're not retired because they're down there, working on the weekends or whenever they're doing helping people get around Walmart. I mean, it's ridiculous. Once you're financially independent, you can do what the heck you want.
And besides that, when you don't need a job, there's lots of opportunities that come up.
Yes.
And so what if you work for a few days a week or a few weeks out of the month or out of the year? You can pick and choose because you have the option. When you're stuck with a job that you have to do to make your bills, you don't have those options. And, when you have that financial independence, then your whole world opens up. And I think another misconception is that once you fire, somehow you lose your mental edge. You don't learn anything new. You contribute to society, and that's one, incorrect, but two, very unfair, because how many of those people who are working 80 hours a week contribute to society? When you fire, you now have all this time to use your expertise, give back to society, invent a project, teach English as a second language, help build houses somewhere, put in water systems, clean water systems in some poor village. Now you've got the time to do that. So we would suggest that before you fire, you write down on a list of all the things you want to do, places you want to go, things you want to learn. And then when you finally fire, you don't get up and go, okay, now what am I going to do? You have 100 things on your list, and you just go through them and go, wow, I can do any of these. I can motorcycle across the country. I can
dream big.
Yeah, dream big. I can start a foundation. I can invent this app that I've been wanting to do and had no time. I can learn French. I can cook in Italy. I can paint. I can learn the saxophone. And so you don't get up the next day and just go, now what am I going to do? I don't have a job. I got nothing to do, and I'm lonely.
It's been 27 years since you both retired, and you are still going strong. Yeah. What advice would you give to our viewers, who are trying to get into fire? Where should they start from? What should they look out for, and all of those things?
The first thing, my recommendation is to track your spending right now when you're working. I mean, start today. Write down everything you spend on, and add it up at the end of the day and have a total. Figure that out daily, monthly, and annually, and keep a log of it so you can see where you're at. And then multiply that. Once you know what your annual spending figure is, multiply that times 25. And that should give you the number. That should give you your number, how much is enough. That should give you the number that you need to have invested in assets. So liquid assets, not a house, but liquid assets that you can get at. And then you become financially independent. Then you can continue to work or say adios, amigo.
And when you're tracking your spending and you say, well, I'm spending too much, we say there's 4 categories in any household that are of the highest spending. And so these are places that you can modify. And that's housing, what you spend on housing, transportation, taxes, and food and entertainment. So say, for instance, you have to be in a certain city with high rent or high house purchase. When you retire, you don't need to stay there. You can relocate to another area that housing is cheaper, or you could house sit around the world, or you could exchange the house that you have in this wonderful city for a house in another wonderful city around the world, or you could rent out a section of your house because, like through Airbnb or something, because you happen to have all of these attractions in your town, you see. And transportations, that you might want to go car free. We decided to do that. You might want to live on a boat. You might want to live in a walkable city. So transportation can be modified too. You can own a motorcycle instead of 2 cars, you see. And then taxes, of course, Billy talked about taxes. And then the last one is food and entertainment. If you learn how to cook, or if you eat at home, if you eat healthy that way, or you eat lunches instead of high-priced dinners, you can make a nice meal at home with a bottle of wine, and it can be just as much fun with some friends as going out spending $300 on dinner. You know what I'm saying? And all the other entertainments, like the high-priced toys, you know, the jet skis and the boats and this kind of stuff. So it's housing, transportation, taxes, and food, entertainment.
Thank you so much for the amazing insights. And now, finally, what is next for you?
We really don't like to have our year sculpted out, sketched out. I mean, we'll talk about some ideas between us, but we're always watching airfares and currencies around the world and seeing if there's a place that interests us that we would like to go. You know, to say we're going to be in Spain or France or Italy next June it's too limiting for us. You know, we'll make that decision a month or two prior.
And some opportunity could come up. We got an opportunity one time when we were living in Guatemala to open up a residence in Vietnam, Saigon, Vietnam. And so we had other plans to maybe do this or that, but then that opportunity came up when it was just like 90-degree difference. You know what I'm saying? And so we went to Vietnam. Then we went to Thailand, and then we went. So we like to stay flexible because you never know what opportunity is going to come up.
We just got back from 10 days at the beach, and so we're still trying to get caught up here.
Thank you so much, Akaisha and Billy, for taking the time to join me today. I'm very grateful.
Thank you for the opportunity, Idy. We appreciate it.
Yes.
Now, guys, check out your blog, retireearlylifestyle.com, for more about your FIRE journey. And also, don't forget to like this video, subscribe for more, and share with your friends.